good afternoon, good evening. Today we'll be looking at appreciating the importance of the fundamentals. Nothing much is happening in this London section. London session will be anticipating some volume during the New York session of what we'll be anticipating is the Bank of Canada and the Bank of Japan. So since we are interested in pound yen, at 10 minutes after 5 Eastern Standard Time, that's what we'll be anticipating some volume coming in from the speech that will be given by Governor Kuroda. However, that doesn't mean that there won't be some volume during the London session. But because of the level we are right now, we will need some strong volume to give us a plausible direction that we need to travel. With that being said, this is what I mean. For British pound, Japanese yen, there are two scenarios that need to play out here. Scenario one is we have reached an area of resistance. Which area of resistance is this? We have reached an area of resistance which is this level. Price is already approaching it. I would have liked to take this buys, but the reason I'm pulling back is because anything could happen at this level. So what I'm looking at is to get a bullish breach, retracement, then bullish momentum. Don't forget this is clean traffic to the left. It goes even high. Okay, this occurred during the Christmas Yuletide period. So if we get a bullish breach above this resistance, this is Chabella for price to continue traveling. However, on the daily time frame, if you look at this technically, on the daily time frame, we are in seller's territory. Okay, this is a retracement phase on the seller's territory. So I'm anticipating if we get a bearish breach, bearish, not bearish, get a bearish breach below this level, I'm anticipating further what bearish momentum. Going to the 4 hours, let us get clean and clear price action. A bearish breach below this level, come for retracement. Let's say we get something like this. Let's say we get something like this. A bearish breach, retracement. No matter how high it is, we don't expect the retracement to come to this level again because of the orders that will be waiting here. Okay, so anything from this level or this zone, we're anticipating the bearish breach to react. Either it drops, if it drops lower than this, it can react from level A, it can react from level B, or it could react from level C. Okay, either of this level we're anticipating price to react from. So anyone that reacts from this is our potential profit taking level. Okay, don't forget that this zone price reacted impulsively. Look at the strong word change in direction. This is what my mentor will call railroad track. This coming down, an equal size of candle going up. So this railroad track is an indication that we have buyers waiting in this zone. And don't forget, this bias is not coming from even the daily or the 4 hour time frame. This bias came from the weekly time frame because of the demand level below this point that we're looking at, or this zone. Okay, so for British pound, Japanese yen, favorable buys or sweet buys, okay, sweet buys will occur above this resistance or supply zone. Sweet buys will occur above here. Okay, sweet buys. However, sweet sells will occur below here. Sweet sells. Okay, so this is what I'm looking at on British pound, Japanese yen. The next thing on my watch list is the gold. Is gold. Let's look at gold. For gold, we have hit a peculiar level, which this level could react as a supply zone. This is what I mean. Okay, this level could react as a supply zone. So what I'm looking at is for price to retrace before continuing. However, if it keeps printing bullish, we want to see some bullish momentum breaching here or crossing this level, taking out this price level, coming for retracement before going continuing. So this is scenario A, this is scenario B. Anyone could play. However, we are still in what? Buyer's territory. We can only start talking of sales when we've gotten what? A bearish breach below this level. That is when we'll talk of, okay, we are confidently in seller's territory. However, at the moment, we're in buyer's territory. Okay, so this is what I'm looking at on gold. The last but not the least is Bitcoin. Bitcoin, like we discussed, if you did not watch the previous video, do well to watch it. Bitcoin and gold tend to correlate positively. At other times, it anti-correlates. Okay, this is one of those times when Bitcoin and gold doesn't correlate. Because if you see the price of gold, you see how it is astronomically what? Rallying. However, Bitcoin is showing some weak movement from the buyer's side of it. So what that implies is that the buyers are there but are disinterested, not fully interested in taking these buys because they're just trying to give what is referred to as a favorable market what value, FMV, or simply say favorable value. So what he's doing here is retracing to give a favorable market value, then it will continue its what dumping. So this we are in seller's territory. This is the minor seller's zone I'm looking at. This is the sell entry, stop loss, my TP or my potential area of profit taking or where I would take my profit is this level. So what I'm looking at is if you look at this fundamentally, there's so much happening in the crypto world right now, considering FTX, considering the regulatory bodies looking at what is going on in Bitcoin, even considering the BlackRock CEO that is interested in looking at the NFTs or just looking at how to get into the Bitcoin sea of Bitcoin stuff. But the point there is so many people have become interested in Bitcoin. So that is introducing institutional money, which means that there's going to be a strong battle unlike what it was. So for that battle to occur, the big boys need price to drop further so that they could take it at a very cheap price before what pushing it upwards. What is the cheap price? Price should drop further. Why retail traders, the minor small boys are looking at this as a retracement phase or the buyers are into the market. The big boys are looking at this as a fair value that they would use to pound it down before eventually taking it up. So the institutional traders, don't be surprised that they might be the one loading buy positions here in order to make price come up a little bit, then sell it down. Once it had dropped to a favorable level, they cover their short positions and buy it again. So this is how most of these big boys look at the market. Why the retail traders are looking at, oh, buyers are being introduced. The institutional traders are looking at it like, oh, we want to get a fair value within these cells before we pump it down. And once we've reached our level of interest where they've already loaded some buy limit orders or pending orders here, we are going to ride the buys and keep loading more of our buy positions as we keep pumping. Which is why if you notice that around this level, price will not just push up, it will do as if it's struggling, just like you're noticing here, because the buyers are loading their order until it gets to a favorable level before you would see the influence of the buyers. So at the moment, I don't want to go too deep into the back end of trading. In simple terms, we are looking at further bearish momentum. The only way I could take my bias from the bearish side of it to the bullish side is if we have a bullish breach above this level, come for retracement, we'll take buys going up. But overall, until we come above this level here, I'm still in what? In favor of sellers until we come above this level. With that being said, do well to subscribe, hit that notification button, comment, and like. Okay? Baraka Bashad. Don't forget Pips Collector. Peace.